I was going to say that about 6 months ago in a forum like this, I would be looking for the exit. People would come to us and saying, why do I need to bother with emerging markets? I'm getting 15% over the last 10 years in US equities. Emerging markets is giving me less than 5%. And I think what's important is sort of understanding where we are today in terms of that discussion around valuation. So emerging markets today represents less than 10% of global market capitalizations. United States is around 70%. On top of that, you think about where the starting point is around valuations themselves. So EM today, on average, and again, this is why on average is also very dangerous, trades at about a 30% discount. The other thing that's I think is important is that if you think about the level of narrowness of the markets, emerging markets is not just an AI opportunity set. You do see sort of the opportunities in financials and the deepening of the asset class. It's definitely not what it was 20 years ago when it was heavily materials and commodity centric, but you are seeing that natural evolution. I do think that today, from a risk reward context, understanding some of the comments from our colleagues, what has historically been a big headwind for emerging markets, which is strong dollar, is turning to be a little bit more of a tailwind. But ultimately, good governance, understanding company balance sheets, understanding that risk reward is you still need to do that work. And there, as an active manager, and we see a lot of really exciting businesses to invest in.